Hey traders, Algo here, and today we're going to be talking about one of my favourite indicators, the Supertrend. What is Supertrend? How does it work? And how can you leverage it to make profitable trading strategies? Stick around to the end to find out. Remember, I'm not a financial advisor, this is not financial advice. I trade algos on cryptos, which is a high risk investment. You need to do your own research because you could lose all of your money. Let's start with the basics. The Supertrend is a trend following indicator designed to identify the direction of the current market trend. It's a popular choice among algo traders for its simplicity and its effectiveness. But how does it achieve this? The Supertrend uses a combination of price and volatility to plot a line above or below the price chart. This line serves as a dynamic trailing stop, adjusting to the market conditions and helping traders to stay on the right side of the trend. At the heart of the Supertrend is a simple yet robust formula. The indicator is calculated based on two primary components, the average true range, or ATR, and a multiplier. The ATR measures market volatility. It's crucial for the Supertrend because it helps dynamically adjust the indicator to varying market conditions. If you want a refresher on ATR, then check out my last video. When prices trend upwards, the Supertrend line acts as a support level, adjusting upwards for each new price point. Conversely, in a downtrend, it acts as a resistance level, providing a dynamic and adaptive stop-loss mechanism. Suppose we have an asset with a current trading price above its Supertrend line. As long as the price remains above this line, the indicator suggests a bullish trend and outputs a buy signal, shown by the green line. When the price falls below the Supertrend line, the indicator outputs a sell signal, shown by the line turning red and moving above the chart. Traders can use these changes in signals as potential entry and exit triggers for their trading. It's worth playing around with the inputs to the Supertrend. A higher ATR value widens the bands, providing a more robust cushion for price movements. If the ATR multiple is increased, or we look at longer time frames, then we're going to get less signals generated. If you're looking at a shorter time frame or a low number of periods, or you've set a low ATR multiple, then the indicator is going to be very sensitive to price movements and generate lots of signals. It really depends on your strategy which is going to work for you better. If you're looking to scalp profits at a high frequency, then having lots of signals is helpful, but you need to make sure that you're capturing these signals in the right market conditions, because although this indicator is very effective in trending markets, if the market moves sideways, then following this strategy won't necessarily make profits. So how can you turn this strategy into a more profitable one? The first way is to combine it with other indicators to determine the trend in the market. If the price, or the short-term average of the price, is above the long-term average, then this would be a sign that we're in a bullish trend. If the opposite were the case, and the price, or the short-term average of the price, was below the long-term average, then this would suggest that we're in a downtrend. If you want, you can add in any other conditions you like relative strength index or unbalanced volume. The key here is to make sure that we've got the right market conditions to be entering and exiting these trades. So if I'm building this algorithm on my block builder, I'd be looking to input the high, low, open and close prices from our data blocks into the Supertrend indicator block. I'd probably use the close as my source, but you can play around and see what works for you. And I'd be feeding the output into a condition block, specifying that if the signal is trending buy and the moving averages, or whatever other trend identifying indicator you're using, suggest that we're in a bull trend, then we can generate our buy signal, and vice versa for our sell conditions. Another option you can consider is looking at different super trends with differing time frames within the same strategy. If you look at the example here, I've input two different super trend lines on this chart, one with 10 periods at a multiple of 2 and one with 12 periods at a multiple of 3. This has only got 2 lines, but I've seen people use strategies with 3 or 4 different trend lines in different ways, so have a play around. The way I use this strategy is to only buy or sell when both super trend indicators are giving the same signal. This might limit the number of false breakouts that might have been signaled, and make sure that we're only trading when there's a real momentum shift, and not just when there's a small swing in what could be a sideways market. Here again on my block builder, you can see that this is quite simple to achieve, just by setting 2 super trend indicator blocks and making sure the parameters are set accordingly, then setting a condition to make sure that indicator 1 and indicator 2 are both trending the same way before we trigger the buy or the sell. Don't just take my word for it though. As I say, you need to try different combinations that may work better for your strategy, and make sure that you thoroughly backtest any strategy you put before you run it live. Hopefully that's been interesting for you. For more tips and insights, watch some of my other content. Happy trading and see you next time.